Yeah, I like that. That's good. So everybody's been talking about the stock market of late. And coming out of this pandemic, it has really hit a bumpy road. The question on everybody's mind, are there still gems in the market? Well, Raul is about to sit with Ferris Jackson to talk about where they see the opportunities and how you can benefit from them. You really need to hear this. Ready, Raul? Action!
All right, so we're here with Ferris Jackson, Portfolio Manager, Global Equities at Burita Investments. Ferris, thanks for joining us.
Yes, thanks, Raul.
Yeah, man. So, all right, so we are here in the midst of the COVID pandemic, or maybe in the second half now. How has the stock market reacted to the pandemic thus far?
Well, I tell you, Raul, the local market, main market declined about 21% in March, And investors are used to seeing returns of over 30% last year in 2019, and we also saw a 30% growth in the main market in the previous year in 2018. So to see a 21% fall off in a portfolio, in a short time span, that's like a significant drop. And I know that will shake many first-time investors. And you'll have a lot of first-time investors in the market because we have seen a significant growth in the local equities market because of initial public offers. That attracted a lot of new investors. For many good reasons too, but many investors are attracted to the returns. But of course, we'll always emphasize the discipline when it comes to investing. Talking to your portfolio advisor and looking at your risk tolerance and your objectives and see what the market can do for you as opposed to just chasing returns. So the US is heading up faster, but I think that our market is not that liquid. And of course, we are in a market cap weighted, it's market cap weighted, so larger companies will influence the index more. So if the larger companies are still down, then we won't necessarily see a significant jump in the market. But certainly, the larger companies will present buying opportunities. A lot of them got saw a fall off in their earnings due to for the decline in the market. So they are heavily invested in the market as well. So we saw Panjam investment income falling off significantly. We saw Sagicor, NCB as well. But of course, those companies are traditional profit generators. They are established companies, strong management team, solid brand presence. So with all of that, without even looking too much at the financials, you know very well that you can pay attention to those companies because those are the things that you want to look at when it comes to buying a company. Just think about it from your standpoint. You're starting a company. Do you understand this business? If you're very good at running the particular company, then certainly you will do well. And the same applies to the management of these companies, because you're really buying the talent of the managers, right? And if you have talented managers with experience and a know-how, then you will certainly feel confident that they'll be able to navigate this crisis effectively. So the bigger companies have been affected, but my expectation is that they will recover.
So we saw a significant market impact. Has it stabilized since then?
With COVID-19, we really don't have an effective treatment or vaccine. And as a result of that, we still have the uncertainty surrounding it. But the truth of the matter is that we have greater clarity because of the fact that the authorities have been responding to it, in both the fiscal and monetary authorities, in terms of stimulus efforts. We have some of that in Jamaica as well, but our main trading partner, the US, has been taking the lead in that respect. So that has more or less created some level of stability at this point in time and removed the level of uncertainty, because it was uncertainty that created that huge sell-off. So we saw like a week done been falling from about 80 odd cents to about 60 odd cents.
Oh, wow.
During this, and Wigton's business is not really consumer driven. They generate wind energy and sell it to JPS. So when we saw that sell off, people were really getting defensive and holding on to cash, which is a natural thing to do when it comes to a period of uncertainty. I mean, it's also strategic as well, because you can sell stocks high and then buy them low, right? So that would have been an opportunity for many investors, so you saw the sell-off taking place. But of course, we'll always emphasize to our clients to always assess your portfolio, talk to your portfolio advisor, and evaluate your own circumstance and see how you should approach the market. So we'll always advise you to have cash at hand to take advantage of opportunities. So we're seeing a significant sell-off. So what do I do? Which stocks do I buy? And of course you get the advice on that.
In terms of in recent years, so 2019, 18, 17, talk a little bit about what kind of returns investors got on the market and what kind of returns they got in the Barita Capital Growth Fund.
Right, so we were 44% last year, and the main market was about 30%. And we were just above the main market in the prior year, still generating over 30% return on investment. So investors should be happy with those kind of return. That's what we do at Barita. We're very aggressive, we're very competitive. So our performance will lead us into the top position, number one, number two. That's pretty much where we feel we belong when it comes to generating money. So when you think about Barita, you're thinking about generating return on your investment. And of course, we're talking about tax-free investment, So the Capital Growth Fund was over 30%, that's 30% tax-free, right? And of course, if you started in 2018, you get the 30%, and on top of that, you're getting 30% on the 30% return in the following year. So of course, that's a benefit of staying invested long term, Of course, markets will have volatility, but that's a natural part of it. It involves risk, and that's why we say use time to your advantage.
Okay. So looking forward, do you see opportunities, or is it all just bleak?
We see opportunities still, despite the fact that the market looks bleak. But a lot depends on the support that we get from the fiscal authorities. In the US, we're expecting another round of support from the authorities, because that's not sufficient what they have provided before, right? So support in terms of paychecks to the workers who lost jobs, and of course credit support to businesses. So the Fed has been buying commercial papers to provide liquidity support for businesses as well. So because of the impact, we're expecting more support. That's not sufficient. And of course, confidence is important when it comes to market. And we've seen a rally taking place in the US, so much so to the point that many are expecting a 10% pullback because of the fact that the fundamentals have not supported the market. But an important thing to note is that markets are forward-looking, so investors look down the road. So while many companies have withdrawn their forward guidance in terms of earnings, people will still flock those companies based on some fundamentals surrounding them. Like, for example, the technology sector, those companies will do well in this kind of market. So Microsoft Teams, people can have meetings at home or in any location. So you don't have to have any gatherings much more. That might very well change that kind of activity going forward. So that's a positive for the technology sector, and it could be a negative for some sectors like the industrials, like airlines, because people might travel less. Business travel would account for a decent portion of revenue and profit for the airline industry, so people might be traveling less. Added to that, COVID-19, so you might have the less passenger load. So some sectors will benefit, others will struggle, and it's for you, the client, to have that discussion with your investment advisor. I mentioned the overseas market, but of course, clients can get exposure to the foreign market through our FX portfolio. Yes. And that has generated a return of over 17% last year, which is pretty decent.
And that's on US dollars?
Yes, US dollar investment. So that's pretty good. And we're doing fairly good so far. Of course, we are mindful of the risks. So we're not just buying into the rally. I mean, we saw the growth in the technology. We took advantage of that. The financial, the industrial, and the energy sector. Those are, I mean, we're seeing a rotation in the market. So initially technology ahead. Now we're seeing those sectors growing because of the recovery. But there are risks ahead. You know, we depend heavily on tourism for jobs and for inflow of US dollars. And we also depend on the US for remittance, right? So in light of the fact that we have the shutdown and a lot of jobs, the unemployment rate for the US, the jobs number should be released tomorrow, and the unemployment rate should be around about 20%, right? And of course, hopefully we see a reduction. We're not going back immediately to the 3.5% historical lows that we've seen or enjoyed up to recently, because of the fact that many jobs will be lost permanently. So we should see the job numbers coming out to give us some insight as to what will happen. So locally, we will now have to take steps to secure our economy. We need to work on not just getting the economy back to where it was, but looking at developing industries and developing our talents locally for to improve our level of productivity, which in turn will help with economic growth. So that all of that ties into the local equity market.
So where do you see opportunities?
The opportunities are there. There are several companies on the market, strong companies with solid balance sheets. The major companies are like the financial sector. I mean, we've seen a lot of innovation. We've seen a lot of corporate action taking place. JMB buying 22% stake in Strategic Financial, Proven taking a major stake in JMB 20%. And also, I mean, how can I not come here and mention Barito? So, of course, with Barito being taken over by Cornerstone, we've seen a significant growth in terms of revenue and profit. Last quarter, we produced a growth of about 25% in profit and about 95% in terms of half year. Now, yes, I'm a Barito worker, so I'm not promoting it, but that's fact, right? I'm stating the fact, and of course, investors can look at that for themselves.
So, with those types of opportunities, how should a new investor approach the market?
Look for opportunities, but of course, have that discussion with your investment advisor. I did mention the new investors would have been nervous. Of course, the seasoned investors will see this as an opportunity for them to buy at bargains, you know, and that's a recommendation that I'll put to the general investing public. There are opportunities out there. Think long term. When you buy stocks, you buy in companies. And if you think about it from the standpoint where you start your own business, you borrow money from the bank, you don't expect the bank to come knocking at your door tomorrow to take back the loan, right? So you have to look at it from the standpoint that you are going to grow your revenue base, look for new markets, employ talent, manage your cost, and improve on your bottom line in terms of your profit. That's what you're doing when you buy a company. So it's not an overnight get rich quick approach that you should take to the market. You have to be patient, you have to be disciplined, and you have to think long term, and the market will work to your benefit.
All right, we've seen a lot of anxiety in the market. So you manage multiple portfolios. Are you nervous?
I'm not nervous about the market. I believe that if you invest in solid companies, then certainly you'll see the benefit. We have been through crises before. It's not the first. We've been through many. And you should expect crises, and they should be looked at as periods where you can look for bargains in the market. You know, so embrace it and be patient and think long term. Look for those opportunities. I like the financials I just mentioned. You have manufacturing companies out there with Cinco. They should get a hit in this period. And separate, I don't believe that any company is really immune to this, except for Wigton. You might have some companies benefiting, like a medical disposable, because of the nature of their business. But nonetheless, you'll have companies that will get a hit. But you'll have to look at those attractive price points to enter the market, which is what you should discuss with your investment advisor. Come to Barito, and we can tell you what those price points are.
Okay. The 21% that you mentioned down in March, that was just for the month of March?
Month of March, yeah.
Wow.
So we saw that recovery in April and the positive movement in May.
Okay, so you're not nervous?
No.
Investors should stay invested and keep investing?
Yes, but of course you have to be responsible. You know, so not being nervous doesn't mean you're going to be irresponsible and carefree in terms of how you approach the market. So you have to ensure that you have cash on hand just in the event that you have an emergency. And you also want to take advantage of those oversold companies, right? And you can always sell those companies that you believe will not generate those the return that you need. So you want to rebalance your portfolio, and that's fine. You know, have that discussion with your investment advisor. But again, we have been through crises before, and of course, this seems to be the worst among them. But still, we have not seen an effective treatment or vaccine as yet. Nonetheless, I believe that the markets will recover. I mean, many are saying that COVID-19 will be here with us, and even if we find a vaccine, it may not have a lasting effect. So it's something that we'll have to deal with. You know, so it will become the new normal, and we'll have to look for those opportunities that present themselves. You know, companies will be doing that. They will be reforming how they operate, utilizing technology more, and we should be looking at those companies that will be identifying those opportunities and taking advantage of them during this crisis. So that's what the investors should do, and we are the professionals. That's what we do every day: evaluate companies, and we make the recommendation to the clients as to what they should buy.
All right, great. Well, Ferris, thanks for your calming words and knowledgeable insight.
Okay, thank you. No problem.
Cool.
All right.